In early years, brokers used to manipulate price charts to their benefit. Then financial authorities came along and clamped down on these activities. So brokers found new ways to take money from traders. Well, online platforms are built to make money from traders. But besides legal ways such as spreads, they have a bag full of tricks that's meant to take more money from you straight into their pockets. In this video, we will discuss the main 3 tricks brokers use to take your money and how to avoid them.
Preview.
Short trading timeframes. A trick founded on human emotions. Greed primarily. It is used on traders wanting to make money fast. Brokers know very well that it is difficult to know where exactly the markets will head every minute, so every 1 minute losing trade means more money for your chosen online broker and a dent in your account balance. Trading commissions. Whether you agree or not, every trade you make attracts a small commission. Consider an option with a 75% return. Where does the remaining 25% go? This is a hidden commission the broker charges to facilitate the trade, and since many traders opt for 1 minute trades, it means that the more winning trades are entered, the more money goes to your broker. Early exits. If you have the option to exit a trade before it expires, you're either faced with a fraction of your initial investment back if it's losing, or a tiny amount of what you could have made if it is a winning trade. The remaining amount will definitely go to your broker. How do you protect yourself from these 3 tricks? In a single word, patience. We usually recommend trading longer time frames that last at least 5 minutes. This implies that you must patiently analyze the chart until the right market conditions present themselves. Most successful traders will spend hours analyzing the price charts, waiting for the right conditions to present themselves. No matter how difficult at first, you'll quickly discover that winners wait and analyze. Commissions cannot be avoided. However, you can ensure that you pay less commissions by trading fewer times. Finally, avoid exiting trades early. If you enter trades that last 5 minutes or more, chances are that you won't have to worry too much about the markets going against you. This in turn means you won't have to exit active trades often. For more information, make sure to read the full article on our website. If you haven't already done so, for more additional information on this topic, you can visit our full article on our website using the link in the description. Also on our website, you will find more free tools and information that can help you in your trading. Note that our website supports 18 different languages. See you in the next video. Thanks for watching.